or formally versus just going
Sure.
into this. So, hey everybody, we're super excited to be back, and I'm happy to have Jemma Green, founder and CEO of Powerledger, on in this podcast. And the reason why we're doing this is, we hadn't met before, but we met at a conference in Switzerland, and yeah, we were prepping for a panel, and we got the panel kicked off, and then in 5 minutes, the adults told us to leave the room, right? So it's like, we were the kids in the room on the panel providing entertainment to, I don't know, it was quite a big audience. I mean, it was maybe 50 people in the room or 60 people, and not, sort of quite influential people there as well. And
A lot
anyway,
of
and so
very important people.
of course, gazillions of dollars under management.
But you need to say why we got kicked off the stage. It wasn't because we misbehaved. It was because it was the end of the day and we were holding up everyone from having a drink at the bar.
Yeah, exactly.
But we felt our conversation was like really interesting, and we were perplexed about why we were being evicted. So this is the conversation we were going to have then
now. And maybe just for the listeners or the watchers, what is your background, and how did you get into crypto, and maybe just tell a bit of a story on you and your background and how you got into crypto.
Sure. So I background is born and raised in Western Australia. I'm from Perth, and I did a finance degree, moved to London, which a lot of Australians do, worked in banking for 11 years.
Yeah.
And then I decided to move back to Perth, where I'm from. And in doing so, I had to choose another career for myself because there's no investment banks there. And between leaving London and moving back to Australia, I did the Camino de Santiago, which is this walk across Spain. And I got this idea, which was I wanted to build an eco-village. And I eventually shared that with some friends, and they said, oh, why don't you talk to this professor at Curtin University in Perth and, and see, he was like a professor of sustainability. And so I reached out to him when I was actually in Latin America en route back home, and said, look, I'm a returning Western Australian. I'm a former banker, and I'd like to build an eco-village in Perth. And he wrote back immediately and said, that's a great idea. And he copied in the mayor of Fremantle. And when I got back, I was meeting the mayor, and the professor was suggesting I do a PhD on this topic. And I thought, well, this is like a good kind of transition to come up with like another career for myself, because I didn't really want to move to Sydney or Melbourne where all the investment banks were. I wanted to do something, close to home. And then I was halfway through my PhD, and I designed this solar and battery system for this eco-village in Fremantle called WGV. And then I was trying to find software that would allow people to trade electricity within the eco-village. So the solar system and the batteries, you could be allocated a portion of the electricity that was generated by the solar system and the battery. And if you weren't home to consume that, you could trade it with your neighbours. That was the concept. And I could not find any software that did that. And then I had my first child, Amelie, and about 6 weeks after she was born, I got this email from a former JP Morgan colleague of mine making an introduction to John Bullich, who's my now co-founder and business partner. And he had developed blockchain applications for various sectors, and he was wanting some introductions to my network. And I didn't really want to respond to the email because I just had a baby and I wanted to have a bit of maternity leave, but I felt bad, and I replied back and said, could you come to my house? And I called up my mum and said, could you come over and hold the baby? And so mum held the baby, and John came over, and he basically explained about blockchain technology. This was February 2016. And I had really only heard of Bitcoin at that stage, and he had developed various blockchain applications for lots of sectors. And I said, well, could it do anything for electricity? And so we started to look together and saw many applications around tokenizing, carbon credits, renewable energy certificates, trading electricity, tracking electricity. We got very excited, and 3 months later, we set up the company.
Awesome.
So it was very unexpected, to set up a company shortly after having a baby, and also in a technology that I was very unfamiliar with. Now we've had the business for 8 years, and we make software for trading environmental attribute certificates like carbon credits and renewable energy certificates, and we've got a module for tracking and trading electricity as well. And so it was very unexpected thing to do, but it's been very rewarding. And then 10 months ago, we decided to move the company from Australia to Switzerland. So we're now based in Zug. And we moved here because actually we didn't have clients in Australia. They were in Europe and and the US. And by this stage, I've also had 2 more kids. I've got 3 kids. And I wanted to be closer to the markets in which we operate, so I didn't have to travel as far away from my family. And Switzerland was just a great place to be based, I think, for raising a family and for the kids to learn German. And also where we're based, Zug is Crypto Valley. Yeah. So there's a big blockchain community here, and we get to meet people like you to learn about the blockchain ecosystem and collaborate together as well.
Yeah. No, interesting. I mean, that's so interesting journey, right? I mean, to go back to, the only reason why I know Fremantle is in my youth, I used to earn a lot of money sailing and supporting boats, and the America's Cup was in Fremantle. Yes. And so it's like, I don't know many crypto companies and blockchain companies down there, but I know a lot of rare earth materials are extracted out of the earth in this sort of Perth area.
Yeah, I actually remember the America's Cup as well. Dennis Conner was like I remember it being in the newspaper. I mean, I was like and 7 years old at the time. Sorry?
Yeah. And John Bertrand.
Yeah, exactly. Yeah. So, but it is a big mining town, as you say, Stefan, and, iron ore, gold, lithium, base metals, all of that stuff. And so we were a bit of a fish out of water there, I'd say. People would be like, I don't understand what you do. And like, they think it's weird because they don't understand it, which is you can appreciate, if people don't understand things, they don't trust it. So it just feels so good being in a part of the ecosystem here where people do instantly get, like when you and I first spoke, within a few seconds of explaining it, you're like, oh, that's actually a real use case for blockchain. And it's nice to be around people that have an appreciation for the technology and also can see how it can actually do things in a better way than traditional kind of Web 2 systems.
And what I appreciate, exactly to your point, right? It's like all of a sudden your conversation doesn't need to start with laying the groundwork and building a foundation. You can immediately start from that foundation upwards, right? You can start building up into the sky, and the limits are, depending how broad and deep the foundations are, the limits are, become limitless in a way, right? Which is really exciting in a place like Switzerland. And what I found is that a lot of innovation around blockchain has not been Silicon Valley based, right? So a lot of the innovation is global. It's very, and it's in pockets around the world, because ultimately, I think in a way, the US did miss a bit of the innovation on blockchain and Bitcoin, right? I think it was just...
Definitely.
Yeah.
Yeah, a couple of things to respond to that. Like if you look at the amount of VC money being raised out of Europe now, it's so much more significant than the US. And I think the vexatious and litigious environment there from regulators, had all the money, leave. Yeah. And so the ecosystem in Europe is far more substantial as a result of that. And then the point that you made about, like just before that, around, really being in an environment where people understand it, get it, and are excited about it. I think when we set up the company, just as a startup, no one believes that you can build anything. So our first projects were prove that you can build something. And we, once you built a project, our first projects were in like New Zealand and Japan and Thailand. But actually, like a French client doesn't really care that much that you can do that, or an Indian client. They want to know, can you build one in Europe or India? Yeah. And so we ended up like building quite a lot of what I now call lighthouse projects to demonstrate capability in different places. And we got up to like 14 countries actually that we're in. Projects. And they served a purpose because they, helped you explore and build credibility and all those things you need to do earlier on in your company's life. But since we moved to Switzerland, which was like coming up to 11 months ago, and we started to actually look at what's the addressable market in those places. And then also, are the people that we're speaking with in those companies kind of lone ranger pioneers in that company, or do they have broader support? Because sometimes you might find a champion, but it's actually just their side pet project and they don't have a mandate, a bigger mandate. But it's not till you get inside the company that you begin to actually understand the nature and extent of the kind of commitment to do more pioneering things. And I think like where we're at right now, and perhaps as a like maturing of ourselves, like working as entrepreneurs, is looking at where's the easiest path to actually and do work with people that get it, that are excited and enthusiastic, and also with the least amount of friction. And that does actually tell you, like, with the hindsight of experience, to actually do more analytical work before. And now I think, given we're a more mature company, that we don't need to kind of prove ourselves in the same way that we did as earlier on.
Yeah, so basically what you can now be a bit more selective in the opportunities that you pursue versus just pursuing any sort of lighthouse project that you sort of felt would allow you to prove and test and validate the models that you were working on. And when you go after these businesses, do you find what is sort of has the sales cycle reduced in terms of adoption and awareness for what you're working on? Has that changed over the time?
Yeah, I think it's definitely gotten shorter, but I'd say the more important point to make around that is that we spend quite a lot of time, like, now understanding the client and the problems that they've got before we send them a slide deck and pitch anything.
Okay.
Like, we're not really showing our slides with our products before, like, after 3 or 4 conversations of really understanding it and then targeting what we're showing earlier on. So I think what that does is has you have a much more relevant conversation rather than a generic one. And that, I think, shortens the sales cycle and filters out things that are probably going to go nowhere. So you're not wasting a lot of time. So I think it allows you to focus more and have a more productive conversation that ultimately leads to more conversions. Because you can have a sales cycle that, is 12 months long, but you're only converting 5% versus a sales cycle that's 12 months long, but you're converting 20%.
Yeah.
And that's just as important as the length and time of the sales cycle. So I think that is a really important piece. And we also began to understand more deeply marketing, like in terms of, for a newer brand, customers need to sort of hear from you sort of 6 or 8 times before they're probably even willing to have a conversation with you. So how do you actually have marketing that actually speaks to them and talks to them in a way that gets their attention, so that they want to have a conversation with you rather than avoid it. You spend a lot of time chasing to try and like get a call with the right people. So I think it's become more sophisticated and more nuanced in terms of what we're doing, and more specific and less general.
Yeah. I mean, BC, before crypto, I was in building, doing SaaS biz. I had a SaaS software company, and we were helping companies aggregate all the metrics into a dashboard for all their mobile applications, right? And some companies had like up to 800, thousands of different apps that none of them ever even knew about. And they could then identify which features were people using, etc. But at the time, again, it just reinforced the same message that you said, right? You needed 6 to 8 touch points before they were willing to engage with you. And the most important thing I found was the champion. You needed a champion on the counterpart that would just go to bat for you and get the budgets and really do this proof of concept or get the trial going. And then you could really build the product together. And you needed to ultimately also create a level of confidence in your counterparty or that champion at the enterprise to really sort of, I can fulfill the promises that I'm going to make, right? And
it's very elegantly summarized, Stefan. I think that's exactly how it is. Sounds like in Web 2 and also in Web 3. That I'd say there's the other layer of it is the reaction people have to blockchain. So, and it could be your champions really pro it, but others within the company are not. So I think throughout the life of the business, depending on the kind of sentiment within a company and in general in the market, we've made blockchain more of a foreground conversation or more of a background conversation.
Yeah.
If they're really interested in it, we'll engage more and actually showcase what the full power of the blockchain. But if they're not, or there's people that have concerns around it, we'll position it as more of like a background conversation, like barcodes in a supermarket. It's not like you go to the supermarket because they've got barcodes, but having them there means the stock control's better, it's faster through the till, there's less mistakes. And it's not like anyone goes to the supermarket just simply because the fact that they've got barcodes there. And so you kind of right size the blockchain conversation. Whereas if they're more keen on it, then you might start talking about like token ecosystems, engagement through tokens, and Web3 for like consumer facing products as well. So I think that's the other element of the business that is perhaps somewhat different to like a traditional SaaS model as well.
And one thing is like just sort of maybe stepping back a little bit on Powerledger and the business that you're in, right? And in the essence, there was a huge wave a while back, ESG, everything needed to be ESG compliant, which I think was actually damaging to the whole industry, right? As in fact, what we want to do and what you're doing is really innovating with technology to provide a service that actually is trying to capture the benefits of being and leveraging technology to actually improve the environment, right? So
Yes.
How has that journey been, and where's Powerledger's real role in that positioning or in that ecosystem?
Yeah, so within that kind of like renewable energy kind of movement, if you like,
Yeah.
there's actually quite a lot of people that are very kind of ideological around that, and and if you look at countries that have a high penetration of renewable energy, they actually have very high electricity costs because they've done it in an ideological way. Like Germany, for example, has 53% renewable energy, the highest electricity costs in the world. Denmark, Australia are all like similar. And that's because they did it through subsidies and feed-in tariffs. They indiscriminately put renewable energy anywhere and often very far away from where the load centres are. So then you have to build expensive transmission and distribution lines to people's homes and businesses. And that actually even if the unit cost of the electricity from the wind or solar is cheap, when you add it all up, it's actually more expensive. And there's a group of people that go, well, it doesn't matter, the planet's burning. And even if we push up electricity prices and have brownouts and blackouts, we should get to renewable energy. And we actually don't ascribe to that at all. We think that's really a disastrous outcome. And why we came up with the technology that we developed for trading electricity was that it's about putting price signals to encourage the growth of renewable energy near to where there's demand, so that you can have a leaner grid and you can actually encourage the growth of renewables to solve grid issues as well, to help balance supply and demand using batteries. And I think that is something that resonates with citizens and businesses, but there is an inherent tension with the business models that are currently with electricity suppliers, where they make a lot of money for maintaining the status quo, and they think very hard about even like losing a bit of margin here to gain something else here that's a bit unknown. So we've had to kind of grapple with all of that in terms of electricity, which is different to say Uber, where like anyone can just get on the road and start using the Uber system, whereas electricity is far more regulated. And so that has been something that we've had to understand. Where is the regulation and the retailers and the network operators more willing? And the places where we found that is actually in Austria. We've got a client there who actually is really pioneering and innovative to, use the champion term. We've had champions in there that have really driven the co-creation of a product together, exactly what you said, called energy communities, which is households, businesses, farms sharing energy with each other, trading energy, giving energy to each other. And we did quite a lot of technical trials, actual trials, and now we're commercially rolling out that product there. And then in the US, I'd say that what I just described there was like creating a new market model, a new commercial model. Whereas for renewable energy certificates, that's an established market. Like REC issuance is about $1 billion a year. So it's very
Wow.
a large market,
Yeah.
but it's actually very fragmented. It's very difficult to buy and sell them. The pricing is opaque. And so there were real opportunities in that particular example to provide efficiency in the process, because if you at the moment buy REX, you might have to set up accounts with all the registries that the REX sit on, and that might cost like thousands of dollars, and then you've got to maintain all those registry accounts and buy them and retire them, and it's very complicated. And then you don't really know how to, what prices you should be buying them at. And there are some marketplaces available, but they're actually they're also very fragmented, and it ends up being that a lot of companies use brokers, and they do that because they don't have to deal with all of that. They get a price and it's very simple, but they end up paying over the odds than they really should. And
Like
not just
OTC deals, is that how they
exactly,
get traded? So okay, I
yeah,
call you up, you call me up, and we do a deal and trade those.
exactly. And brokers have to find recs and as well. And so what we saw the opportunity for is something that is actually registry agnostic. So they sign in to TraceX, which is our marketplace for trading certificates in the US, and they can basically access recs from any registry without having to set up an account with every single registry. And the onboarding process to use our system is like 15 minutes. It's like super fast. And they can physically and financially settle on platforms. So they don't have to pay money and then wait days to get the certificates. That
Yeah.
actually all happens at the same time. And so the counterparty risk is dealt with as well. And they don't have to have middle and back office functions as well to handle all of that process. It's all handled for them. And so that's, an existing high value market that technology can provide something that is far more efficient and easy to use, which has them more likely to, trade themselves. And then I think ultimately what we do is we tokenize those certificates.
Yeah.
At the moment, it's just within the ecosystem. But the opportunity, I think, is where these assets could become tradable outside, and then you create more liquid markets around them, and they become investable assets, not just bought by someone that's retiring them, but you create more activity around them and stimulate the market more. And I think that this is where, as someone that worked in banking, you can see how, what liquidity provides for markets, in terms of developing them and making them more sophisticated and not so politically driven by ideology, which I think is ultimately very damaging.
Yeah, it's actually ultimately building something and making it happen versus just virtue signaling and talking about it, right? I mean, one of the things that I think that is really interesting, and I mean, we're in the real world asset space, right? We've been tracking all sorts of pricing. We now have about 20 million items that we track. We have 3 price feeds per item, and we have over 100 different sources of prices that we're using to capture all of those 20 million items. And down that path, we've realized that energy is a really interesting product, right? And the ability, people love trading energy. I mean, we've seen that in the past, and examples of Enron come to mind. But ultimately, yeah, and one of the things I've always been fascinated by carbon credits, right? I mean, everybody's been talking about carbon credits, but everybody's got their own carbon credit. It's very difficult to build fungibility around carbon credits because everybody's got different externalities and different backgrounds and ages, etc. So how do I earn a renewable energy certificate? How does one get generated?
Yeah, so a great question, like first principles, and thanks for asking that. So one renewable energy certificate is 1 megawatt hour of renewable power generated.
Okay.
Yeah. And one carbon credit is
Yeah.
1 ton of carbon
Yeah.
that is abated by some means. And you could have a renewable energy project that is registered to get carbon credits, or for renewable energy certificates, but not both, because that would be double counting. So renewable energy could be used for both, whereas carbon could be renewable energy, but could be things like forestry projects or soil restoration projects or biochar, for example. And most of the carbon markets globally are voluntary. The European ETS is the biggest compliance market. And actually, that market is much bigger than all the voluntary markets combined. So it's very significant. But in terms of carbon credits, and this is quite, you've seen it. If you look at the graph for demanding carbon credits, it's kind of going up and up each year. But in 2023, it actually went down like more than, I think, like maybe 40% demand decline, and price decline as well was like double digits as well, maybe 20 or 30%. And I haven't yet figured out exactly what's behind that, but it could well be because there were quite a lot of scandals actually within the carbon credit space. But it could also be because of what you pointed to and alluded to before around, ideologies driving things, and people starting to question, do I really want to be buying credits for those things? And I don't have like a considered view on that yet, but I think it's very interesting to see actually a decline in demand for carbon credits in 2023. And it'll be very interesting to see what happens this year, whether there's a bounce back, because what it actually says is if you're a company and you're voluntarily saying, I'm going to offset my emissions,
my footprint,
you didn't buy credits in 2023. Does that mean you've abandoned your publicly stated policy, or are you just waiting to find better quality credits to cover that, your emissions for that period, which really speaks to your other comment, Stefan, which was, how people want to buy things that they're not necessarily that fungible. And I think that in the voluntary space, it's quite important for companies to buy carbon credits from projects that they can maximize their reputational bang for buck. So they want to buy carbon credits from markets in which they operate to support local communities, or they want to buy carbon credits from projects that have a social element to it as well, which might be providing like economic opportunities, and that they can really communicate that and maximize the reputational benefits from actually that expenditure. And so, I think that those attributes effectively mean that if you tokenize them, you're going to have different tokens for every project. And, as someone, that you work in indices, that could be really interesting in terms of having like a basket of tokens that have different attributes in terms of like having a portfolio exposure. But what that also means is that if you did trade those things, like in DeFi, or you're going to need like liquidity in all those different pools. And so it's a bit antithetical to actually the idea of creating liquidity, like because they're unique and the unique attributes are quite important. So I was interested to ask you actually, what do you think about that in terms of the things that are like that, if they could be NFTs, that are unique, that you want to create liquidity around and volume around at the same time?
Yeah, I mean, it's from my perspective, what I like about it and where I think there's an opportunity is creating multi-side pools, right? So we could have like curve pools. You've got three different assets in one pool, for example, that are balanced out equally. You could have like balancer that has, you have 6 tokens in one pool, and then a counter pool would be in USDC, for example. So the liquidity is offset with 6 different tokens, for example, right? How to manage that, how to weight that, and then you brand that, and then you take that to market. Those are then technicalities that are needed associated with that. But then all of a sudden, you've created liquidity around a class that hasn't existed in the past and has been hard to try and penetrate. And then you can see throughout that how the underlyings are performing, and then maybe one becomes big enough to then go and bootstrap and have a one-on-one, its own unique pool, right? Things like that.
Yeah. So what you're really talking about is how do you create liquidity around emerging assets. Like emerging asset classes.
Definitely. And I think what I'm intrigued about is the ability to trade my renewable energy certificates, right? And your TraceX platform, right? So it's great, and I'm sure at the moment it's maybe more because it's energy, it's regulated, it's maybe more permissioned based. I need to go onto there as an official licensed trader to be able to trade that. But in the end, what is interesting is to be able to open that up, right? So the more
Yeah.
people participate, the greater the liquidity, underlying liquidity starts to become, the more participants become interested in that. And then you can start opening up a peer to peer electric trading marketplace, right? Where I have surplus energy in this building. I'm at home. I've got solar panels. I don't need it during the day. I offset it and I part it into the grid, and I don't earn much maybe, but I earn, enough to pay for, I don't know, sort of, the champagne bottle at the end of the month or something, or, the water juice or whatever I want, the osmosis water creator or something. But either way, it's that ability to do that. And I think, yeah, that's sort of my view around
Well,
that.
I mean, what you're talking about is like a vision for the future that I think I actually think will happen. We outlined this in our original white paper that we wrote in 2017, like a
Yeah.
kind of vision for energy that has it be so fungible, like you just described. And I think that uh, there are going to be lots of um, there's going to be lots of players that
Yeah.
co-create that. And I think about it like analogously to like 1996 when the Telecommunication Deregulation Act
Yeah.
happened.
Yeah. Yeah.
When you get that first unlocking, and then you get a lot of new companies set up. Like anyone that had a modem could become an
Yeah.
ISP, and there were thousands of them.
Yeah.
And then you had like a maturation of that, and like a lot of M&A and aggregation. And that's actually like how we see things unfolding, which is why we also set up a fund this year, leveraging our balance sheet to invest in other companies
Yeah.
to support them that are like doing things that we understand that are working in our space, but also just things that we think are like really good projects, so that we can invest equity in them, and to the extent that it's helpful, support them as well. Given that we've got some experience in developing software and enterprise software sales as well.
Yeah, no, that's, I mean, I think that's a unique market. The other thing that we touched on carbon credits, which I think are another area with a lot of room for improvement. Let's put it like that. It's like, and I think you've highlighted it earlier, right? So if I'm much more interested in carbon credits that are closer to my sort of living, if you will, right? My style of living, my neighborhood, etc. And so how can I actually have a personal level of fungibility associated with the carbon
Yeah.
credit that's relevant to me and my family, and then use that to offset my flight, my whatever that, then,
Yes.
yeah.
Well, I think that, once you've got like something that's tokenized and it's like not just within a walled garden, it could be traded in any capacity. And then the way I see that happening, like to kind of connect it back to retiring it against something, or to actually physically redeem the
Yeah.
certificate if it's not if it's not on a registry that is effectively like a blockchain registry, which would,
Yeah.
it wouldn't be really a registry, it'd just be wallets on like a blockchain. But to the extent that it's like a Web 2 registry, then
Yeah.
you would KYC yourself and like redeem your token for the actual underlying credit, and then you could retire it. And so I see that like a lot of what we've done in the 8 years that we've had the business is looking at how do we connect Web 2 with Web 3. And, if you just went like pure Web 3 to start off with, you would scare people away. So we've done Web 2 and incorporated more Web 3 in. And I think that, what we're talking about here is how do you actually unlock the potential of like a token that represents carbon, so that it can be tradable, you can create liquidity around it, and it can move freely, and then ultimately connect it back into Web 2 land where it becomes redeemable against like the actual physical digital asset.
So what do you think is holding all of this back? I mean, one of the, what I know you mentioned regulations. It's a regulated industry. Europe is notorious, for actually more regulation than innovation. Um, and even the US, you were talking about it earlier, right? It's very litigious. You've got even regulators come in after they've given you approval to go ahead. They then come after you after the fact. So it's very difficult. How do you see the change, and where do you see it going?
Yeah, so I think carbon credits for me, like it's going to be very politically driven. So, this year, 2024, I think there's more elections happening, around the world than anywhere else. And so the results of those are going to be very important as to whether carbon becomes like regulated as opposed to just a voluntary thing. If it's just voluntary, I think it's going to remain small, and there's not going to be a lot of demand grow and a lot of demand growth, I would say. And actually, there may be companies that take a retrograde step and abandon their plans and commitments. Whereas for renewable energy, I feel like that's got a bit of a different sentiment about it.
Yep.
And to buy renewable energy, the way you buy it is you actually can either have what's called an offtake agreement with like a project, like a solar farm.
Yep.
So what you're actually buying with an offtake agreement is the electricity itself and the certificates. So when you have like 1 megawatt hour of power plus one certificate, you can actually legally and validly say, I've bought renewable energy.
Yeah.
But you could actually separate them, and they actually do get separated as well, like unbundled. So you can just buy the solar farm the company that developed the solar farms might just sell the certificate to you and sell me the energy. And actually, I can no longer call it renewable energy anymore because I haven't got the certificate along with it.
Okay.
Yeah. So that's the accounting system, if you like, for renewable energy. And I think that it's somewhat distinct from like the carbon offset conversation, because a lot of people want to buy renewable energy regardless of it's not always intimately linked that I'm buying renewable energy and I'm also going to offset all my carbon emissions. They might be actually separate, which is why you see what I would call $1 billion rec market that is growing every year. So somewhat notwithstanding what happens politically around carbon, I think that rec market is growing. But what makes it different from carbon credits is domestic. Like if you want to, if you're operating in America, you need to buy certificates that were generated in America, renewable energy certificates that were generated in America. You can't buy them from Australia.
Okay.
Whereas carbon credits is more global. Like we can be in Switzerland and have a business operating here, and you could buy carbon credits from Africa, and that's like seen as a legitimate thing to actually facilitate economic development in that country and abate carbon. So I think that I reckon that the REX market has a clearer prospective future around demand and price consistency, and also people wanting, as they might, for example, not have wanted to they might have just bought it from their retailer, their energy supplier to start off with. But as they kind of get along the journey, they might want to start buying certificates themselves and getting better prices. So I think that this is a market for which the buyers are going to become more sophisticated and more wanting to manage their own price risk, which I think for a solution like TraceX, I think will have increasing relevance for them, as well as more people wanting to buy renewable energy separate to the carbon conversation.
So I'm going to dig into this a little bit more because I'm intrigued by the renewable energy certificate and the uncoupling of those and how that actually works. So I've got solar panels. I create electricity. I now have that electricity from renewable energy sources. Who attests that I've got that energy? I've achieved that and issues the renewable energy certificate today.
Yes. So it depends if it's a voluntary market or a compliance market. Okay. So, for example, if it's a compliance market, the government, the state, or the national government will set a target. Say we've got to have 30% renewable energy in the system, and then the generators submit their generation records to the government that has like a regulator, and they will validate that through a process called measurement, reporting, and verification, and then they'll issue the certificates and they'll maintain a registry. And so the consumers of electricity, like companies that have to comply with that target, must buy those certificates and then retire them against the volume of electricity that they consume.
Okay.
So that's the compliance market. The voluntary market might be, say, like you might have in a country a 30% renewable energy target, but the company wants to go 100. So they've got to buy 70% more certificates. They could buy them from the compliance registry, but they could also buy them from voluntary registries. So there are organizations like IREC, which is like a voluntary registry that you can submit your generation data to, and then they will issue you voluntary renewable energy certificates. So companies can buy those certificates from somebody, and then they're maintained on these voluntary registries. And that's actually a very common occurrence.
Interesting. Yeah, because I mean, in crypto, one of the things, or especially in Bitcoin, proof of work, you're really the Bitcoin is created based on the electricity that has been consumed, right? And
Yes.
so ultimately, your money printer is the electricity, right? And in
Yes.
the case of Rex, it sounds like that's the same thing, right?
100%.
Yeah.
They're so analogous, and yeah, it's a good insight you've just had there. And I mean, ultimately, you could create minting of Rex from the meter, if you can create a process around that. And I think that will be the end state. That's ultimately what you'll end up with.
Yeah.
Yeah, we're just not there yet. In actual fact, what happens right now is you get data, like historic data, that gets fed, from meters to like aggregated data collectors, and then like put in the cloud and downloaded. And there's like a whole process of like moving data from one place to another. But I think, there can be mistakes, there can be issues, and I think there's a lot of that stuff. And because the retailers and the energy companies have there's so little visibility around that, you don't really see the mistakes.
I mean,
You hear,
it's like you've got all these toll takers in the middle too. I'm sure there are a whole bunch of different toll takers, and everybody takes a little slice of the
yes,
pie. And so,
exactly,
not only inefficiencies, but also costs incurred by going
huge.
through this process, right?
Yeah, absolutely. Yeah, but ultimately you're right. And I think this is going to become even more relevant with, people talk about things like energy transition. And I just think it's such a misnomer, because actually we're in a state of energy expansion. We're consuming more energy every year than ever before. And it's been like that
Yeah,
since,
for
for
sure.
100 years. So
Yep.
the idea that we're going to just replace all the existing energy sources with renewables is just so naive and ridiculous.
Yeah, yeah,
It
yeah.
and I'm not just speaking, but based on like a perception. But if you look at all the different energy sources through history, like coal and gas and nuclear, none of them replaced the ones that preceded them. They
Yep.
were just added into the system. And I
Yep.
think it's the same with renewables. We're expanding our consumption of energy. We're expanding. We've got new sources of energy,
Yeah.
but I think that the idea that you can just turn off all of these things, and particularly without a replacement, look at countries that have tried to do that and what's happened to their electricity prices. They've gone through the roof. People have had to choose between heating and eating. Industries
Yeah.
get offshored. People lose jobs. Like
It's, it's
if you want to see what happens, go to South Africa and ask people there, like, what do they think of having,
load shedding, right? Call it,
load
right?
shedding? Yeah, exactly. And it's dramatically reduced their quality of life.
And it's a significant economic impact, and there is a correlation, a very strong correlation between GDP growth and electricity availability, right? So the availability and the growth of electricity helps foster the growth of an economy, right? I mean,
Totally,
yeah,
totally. They're very intimately linked, Stefan, and that in many cases, that is what will bring people out of poverty
yeah,
and actually allow them
exactly.
to economically develop.
Yeah.
But in a high income OECD country as well, the absence of electricity will definitely cause recession or worse. And impact like the strength of the overall economy and ultimately people's quality of life and standard of living.
And that's why, sort of, in a way, I feel, the period we actually live in, if it were allowed to let rip, would be the most exciting time to be alive, right? We've got all these technologies available. We've got all these new, and renewable, all the things that you're creating, right? We're working on the blockchain, right? We've got all these, AI productivity gain tools that we can all use. We've got new medicine, capabilities, and all of those are going to allow us to create growth and create hope and bring the world up to a whole new level. But we need to have the ability to really let those flourish and create new paths for those. And I think energy is a really important part. And in a lot of the part of the world, you don't have reliable, consistent supply of energy, and that's really to the detriment of those specific economies.
Yeah, ultimately, yeah, it's a handbrake that
Yeah,
that determines a lot about people's prospects in life and economic future. But I mean, I think you just sort of started by expressing, I think, a bit of a negative sentiment about you know, and I definitely have moments feeling like that as well, where it's not happening fast enough or it's not going in the right direction at all. Um, but I'd say that although it doesn't always go exactly how I would like it to at any given moment, and I'm not just talking about my own like circumstances, but just observing what is going on in the world, I actually still feel very optimistic that that things are going actually in a good direction overall. Like I am, although things may, in certain instances, may not be going in a direction that I think is good. I think overall, I feel like there's so much. I am very excited to be working in this field, and I feel like there's a huge opportunity, and it's not just like Pollyanna wishful thinking. I can see things unfolding and changes happening in a very positive and meaningful way.
yeah, no, I mean, yeah, I mean, I don't think I'd be doing what I'm doing if I didn't believe and I think as entrepreneurs, we by nature have to be
Yeah.
positive, right? We always have to find an angle and an opportunity in every time, everywhere where we're in our pursuits. But one of the things that I'm curious about, because we've been working, I mean, we're trying to look at number one, tokenizing the real world assets and identifying prices for energy, right? Oil, coal. We've been looking at gas. We haven't actually figured out how to look at renewables, but now with Rex and after we've met, I'm super keen to go down that path. But the one that we have really been looking at is uranium, right? And
Uh-huh.
especially that, I think now, correct me if I'm wrong, but it's also considered renewable. Is that right?
Well, I wouldn't call uh, uranium
Or uranium,
renewable
nuclear
in
power.
a way that, but it's definitely carbon free
Yeah.
without question,
Okay.
and it's definitely carbon free. Well, nuclear electricity is carbon free,
Yeah.
and uranium is obviously the input
The
fuel for that.
source of that. Yeah.
And I think it's always been seen as carbon free, but people within the renewable energy movement, don't want that to be part of the kind of energy mix. And I mean, there are companies that, like Google, for example, I mean, they procure a lot of their energy from nuclear,
Yeah.
but I think they're quite squeamish about it because if you read it in their reports,
Yeah.
they write things like carbon-free electricity, and it's like if you look at the footnote, you can find that it's actually nuclear because I think they don't want to the public to know about it because they know that it's polarizing
Yeah.
on the topic. But I think it doesn't make sense everywhere, but in some places that is going to be like an essential thing to provide energy. But I'd say that what nuclear has as a challenge is the costs associated and the time it takes to get projects up, whereas
Yeah.
other sources of energy like a gas-fired power
Yeah.
station can be set up and deployed very fast.
Yeah.
So I think there are dynamic beyond the thing that makes people squeamish about nuclear, which is the safety risks. There are other kind of fundamental attributes of actually setting up systems, and some of it can be addressed by smaller nuclear reactors. But it's not just as simple as just putting a small one, in your neighborhood.
Yeah. I don't know. I just saw Rolls-Royce came up with a fusion machine that apparently is for your home. So you can have a power generator for your home using
Have they got a lot of
fusion.
orders?
I don't know. I just saw the website the other day and I thought it was fascinating, right? I mean, and then if I think about that, and then I think about what we've just been talking about with Rex, I see a whole new money printer coming to life, right? And in a way, could that, yeah, if I'm a government, I set up uranium, I set up nuclear power plants, and those generate a whole bunch of, I mean, the power and the efficiency associated with converting uranium into electricity in a nuclear power plant is extremely high, and it's renewable, and I can get a wreck off the back of it. I get so many benefits for
Yeah.
my nation, and I've created a whole new source of income in addition to
Well,
selling that electricity to consumers.
yeah, I mean, I think that in that case, like if you generate like a carbon credit or a renewable energy certificate off
Yeah.
it, the question will be how much it will be worth. And you can see a
Yeah.
huge price differential between credits generated from different sources. So
Okay.
even within renewables, large hydropower certificates
Yeah.
are so low in price compared to like wind and solar. Like because they're
And
they're
why?
seen as somewhat of a pariah in like rightly or wrongly
Yeah.
because large scale
Yeah.
power projects can create environmental issues like around like biodiversity and ecosystems and displacement of people. So they don't fetch as high a price for the certificates as certificates originated from, say, biochar. Biochar, I think, is trading at like $160 a ton because carbon removals are seen as more credible form of carbon abatement than other things. So things that are actually sequestering
Interesting.
carbon from the
Yeah.
atmosphere fetch a much higher price and are like companies have latched onto this and want to support biochar projects as well. It's become
And,
like a kind of in thing.
and is that the market? Is that the market defining the prices, or is that a regulator giving them, or some sort of consortium or body defining that this is bad, so we shouldn't give it that price? It should have a
Yeah,
lower price, or is it because the
market.
OTCs that are doing the trade? Oh, it's the public. Okay.
Yeah, it's the buyers. So
Yep.
it's companies
Yeah.
like biochar is like
Okay.
an in thing, and people like companies want to
Okay.
buy carbon
Okay.
credits from biochar projects. Yeah, it seemed to have like a range of like environmental benefits, social benefits as well. So I think that the demand piece for carbon credits is the big open question right now. Like any market, you've got to have people that want to buy the product. And I'd say that, yes, nuclear electricity will attract credits, but then the price is a question mark over the price that they'll receive. In a regulated market, then they may be seen ubiquitously, but in a voluntary market, I think that they will be differentiated. That's not to say companies won't use them. Like I gave you the example just now of Google,
Yeah.
and maybe they're buying them cheaper, which is probably why they're doing it in the first place. Like the electricity that they can buy that's carbon free is cheaper than if they were to buy it from other sources.
But it's still like the sustainability officer that really sort of has a big impact in the purchase, and the types that they're willing to pay for in terms of achieving the offset that they're hoping to achieve.
Yes,
Yeah,
exactly.
yeah.
Yeah.
Interesting. I mean, yeah, I think it'd be amazing if you could have sort of, yeah, I mean, your TraceX platform, right? How could that get to a greater level of adoption where the price is defined in there and the market defines the price based on not just the buyer, but also the sellers, and the more participants you have, ultimately, the greater the validation associated with the price.
100%.
Yeah,
Yeah. I mean, you've got basically more depth to your liquidity.
exactly.
Yeah. And then you've got people that are buying it just to buy it and retire against their obligations or
Yeah.
commitments. And then you've got market participants that are, trading that and providing liquidity and trading volatility in the market as well. And I think that's where you get like a real maturation. And I think that is unfolding now in the attribute certificate market to a greater extent with renewable energy certificates, but it's all in certain pockets like Europe. The compliance market there has created like a substantial market there for compliance carbon credits.
I mean, I'd love to work and figure out how we could work together and build out an index around renewable certificates, right? Or even carbon credits. How could we create a certificate or a liquidity pool associated with that, right? What would we add to that pool? What would a weighting look like? How do we build that out and then create a tokenized product around that and see if that then becomes fungible and adopted, right? And how do we build out market opportunities associated with that? Where would that get the first foothold, and how to scale that, and what could that be used for in a sort of decentralized finance sort of model?
Yeah, I mean, I think that's, music to my ears. I think we should definitely have that conversation and explore things further. That'd be awesome.
So, Jemma, how can people follow and learn about Powerledger, about you and your voices, and what channels, and where should they go to follow you?
Yeah, so you can go to our website, which is powerledger.io,
Yeah,
and we're on all the usual, Telegram, LinkedIn, Twitter, and we have the Power Token, which is on all major exchanges,
yeah,
and on CoinMarketCap as well. And you can also find me on Twitter and LinkedIn.
great. Well, thank you. Super insightful, fresh, nice set of eyes, positive, and good perspective to where we're going and where we're heading, and just another entrepreneur persistently, tenaciously pursuing, the opportunities that I think are arising, and building amazing solutions that we need on this planet. So, thank you for your time, and hope everybody enjoyed this, and thank you.
Thanks so much for having me, Stefan, and thanks for asking the first principle questions as well to make sure that everyone understood what we were talking about.
No, no, great. Of course. Thank you.